Oil prices have risen after the world's major oil-producing countries agreed to slash output. The production cartel OPEC joined Russia and others in an effort to boost the oil price and an energy market ravaged by the coronavirus pandemic. Global oil supplies will be cut by 10%.
It's being called the biggest oil production cut ever. OPEC Plus, which brings together the oil cartel with other producers like Russia, said it would cut world output by 10%. In the next 2 months, OPEC and OPEC Plus countries will reduce production by 10 million barrels. For the 6 months after that, they will cut production by 8 million barrels per day, and for the subsequent 16 months, 6 million barrels will be cut per day. Oil prices had gone into freefall on worries about the virus and a price war between Saudi Arabia and Russia. But low prices also threatened the US shale oil industry. President Donald Trump welcomed the agreement, calling it a great deal for all. But with oil tanks filling up around the world and energy-hungry industries shut down, many analysts are warning the agreement may do little to stabilize the oil market.
Right, Arthur from our business department is at the table with me. Arthur, what does this deal mean for the worldwide economy?
Well, Christine, the first thing that it means really is it's a little bit of respite and it's a little bit of stability for hopefully the oil price and for the energy sector. Now, it remains to be seen exactly how markets are going to react. We've had some initial reaction this morning, seemingly quite positive in that some minor increases in the oil price of about 5%, 6%, but in the longer term, there's still a great degree of uncertainty as to how much investors are going to embrace this, whether the cuts are sustainable and whether it will be enough to compensate for the massive loss and reduction in overall demand in the world economy for oil. So it's respite for the sector, but uncertain yet. We'll need to wait a little bit longer to see if it has any longer impact.
This deal looked very difficult until recently. What changed?
Well, it seems to be that the big thing that changed is the intervention of the US political system, basically, Donald Trump and also US senators. So ordinarily, Saudi Arabia and Russia essentially carve up the global oil market in terms of the price. They generally control it through OPEC and OPEC Plus, Russia as an auxiliary member. But there's been a lot of pressure in recent days from Trump and US senators. Indeed, there was reports over the weekend of a number of US senators directly contacting the Saudi energy minister and talking about changing the longer-term relationship between Washington and Riyadh unless Saudi agreed to what essentially the US wanted. So that would explain a lot of Donald Trump's happiness at the deal, because it seems to underline his influence in terms of getting it struck.
Other households all over the world would have benefited from the recent low oil prices. Does this deal change that? Is this bad news for the consumer? Well,
I would say, Christine, it's not quite as simple as that. In more stable times, when the global economy is not going through the kind of existential crisis which is going through at the moment with COVID-19 and the pandemic, that might be generally seen as a good thing, of course. Lower oil prices has an impact across the economy and it generally helps consumers. But what's not good for consumers and what's not good for business in general is when the entire energy sector as a whole is threatened to the extent which a 35% drop in demand, which is what we're experiencing at the moment, is affecting it. That could lead potentially, if things continued in that vein, to the requirement for government bailouts of large state oil companies. It could lead to chaos across the energy sector, many thousands, in fact hundreds of thousands of jobs at risk. So no is the simple answer I would say to that question. It is not really a case where it's simply a good thing for consumers when the price is low. What you need is stability first and foremost.
Okay. Arthur Sullivan, thank you.